Hey, good afternoon, everyone. Just we'll wait for another minute for a few more people to log in. Give everyone's always a little bit late. Just a reminder, I think it would have flashed up to let you know that this session is being recorded. So everyone's aware of that. There's people coming on all the time. Yeah. Hope everyone's safe, dry and well. Hey, Doris, very well. Someone's using the chat already. That's great. Okay, it's 12:31, so we might kick off. A few people will probably still be late, as is always normal. Thank you very much for everyone attending. It's our first of our Advivo Business Booster events. So those of you who've been familiar with Advivo for a number of years know that education is one of our values and one thing that we strive to for both our staff and our clients. Prior to COVID, we used to regularly run face-to-face events usually at the Avolo Hotel with networking afterwards. The first year of COVID saw us go to online only. Last year, we went to a hybrid version, and the hybrid version had difficulty because every time we'd plan something, we would run into another lockdown or something like that. So we've decided to kick off 2022 year with our Business Booster series of events. So there will be a regular, probably bi-monthly to quarterly series of events, which will all be online. We may still do one or so face-to-face event, but our Business Booster events will be regularly broadcast to keep you abreast of what's happening and bring you up to date. So welcome to the first one. Kay, if you could just go forward to the next screen, please. As with everything, this is it's a general discussion. It's not going through everyone's personal financial situation. So what we're discussing today is general advice only. If you have any questions for us or for Owen, please direct those questions directly to us and we can answer them in an informed manner. So please take note of the disclaimer on the screen. Thank you very much. Okay, so kicking off, and I hope we're all well. I will add, I'm suffering from COVID, so if I go into a coughing fit, please forgive me, but I'll try to manage that as best I can. Welcome, Owen McGuigan, to our event, Making the Most Out of Your Bank. Owen, I'm very pleased to say, is our banker, and which is a segue to one of the questions later on, has been so for 7 years. And we regularly catch up with Owen and keep him informed of what we're doing, and he keeps us informed what the bank's doing, which goes a long way to a good banking relationship. So he will talk about some of those things later on. This is an interactive event. So we have a number of questions that, thank you very much for those people that have done so, have been submitted. If you have any more questions, feel free to add them via the chat function, and we will try and get through them all if we can. Owen is relationship director with St. George. He's been a relationship banker for over 20 years, spent the past 19 with St. George in commercial banking. He looks after us. He specialises in accountants and others and is very knowledgeable. Over that time, Owen's enjoyed supporting clients to achieve growth aspirations, particularly in health professionals and leveraging cash flow sectors. Outside of work, despite a distinct lack of skills, he tells us, he's a skier, that's snow, and he's a rugby tragic, a big supporter of the Queensland Reds through their highs and lows, he adds. Owen, do you want to add anything more to that?
Yeah, thanks, Leon, and thanks to the Advivo team for putting this together today, and thanks for everyone for giving up their lunch hour to dial in. I think through COVID, that sort of we've certainly learned new ways of working and communicating, and with the accessibility, I think we'd lose quite a lot of people if we, with the roads closed, if we were hosting an in-person event anyway today. COVID notwithstanding, I had a negative PCR test overnight, but my voice is still a little bit croaky. I was not good enough to catch COVID, so I've just got normal man flu. So if my voice gives out as well through today, I do apologise. What I would say today is, look, the discussion and the answers to questions, I won't give the bank PR answer, which I think is sometimes a little bit vague and underwhelming. I'll give an answer that I would give to any customer, proposed or existing, sitting in front of me. So these are essentially my views, sort of formed over sort of 20 years in the industry. They will be general in nature, as Leon suggests, because I won't have the opportunity to assess financial needs and financial positions, but I'm going to be quite candid. So, but I would reiterate that they're my views. And if you want to have a more detailed discussion, I'm more than happy to have a one-on-one sort of catch up after this. But really looking forward to the event. And again, thank you very much to everyone who sent through questions already.
Thanks, Owen, and look, thank you again for participating in this and suggesting that a couple of months ago when we talked about this, and glad that we've got you to kick off our Business Booster series. So I'll kick off with question number one. How does the bank work with various levels of government to access government assistance they talk about for the likes of COVID and very topical at the moment? Advivo published some details yesterday of flood assistance that's available for businesses. So how does the bank help our people access those types of things, Owen?
Yep, thanks, Leon. A very poignant question for currently. Probably the big item that I would talk about is what we call the SMERL loan. Now, bankers love acronyms, but the SMERL loan is the SME recovery loan. So that's proposed by the Australian government, backed by Treasury. And that is designed to help businesses, as it says in the title, recover from the impacts of COVID. Now, that was also enhanced to assist clients who were impacted by the floods in New South Wales. Now, we haven't heard anything yet whether the government will extend that to flood-impacted businesses in southeast Queensland and northern New South Wales in the current environment. We expect they probably will. Hasn't been announced yet, but the SMERL loan, it's not a grant from the government, so it's not like the JobKeeper payment, or it's not the ATO cash flow boost. So it is a loan. So from the bank, it is repayable. But what the government has done is provide a guarantee to those loans. So if businesses need funds to recover, to grow, to put their business back on track, but they don't have the security in their house or within their business to access those that loans, then the government will top up that security. Now, it's not 100%. So originally the SMERL loans were guaranteed 80% by the government, now guaranteed 50% in the most recent tranche of funding, which was announced towards the end of last year and is available up until June this year. So they are a loan, so you have to be able to be confident that they can repay those loans themselves, but it gives the bank flexibility to, again, not worry about how much your house is worth or how much your building is worth, and also to not look at your FY21 results or your FY20 results, because they're going to be COVID impacted. So we can look back to your FY19 results, or we can look at forecasts that you've put together with your accountants and get to understand the assumptions as to why they might be reasonable, and we can rely on them rather than your COVID impacted financial results. So it's a really sort of powerful tool that we're assisting clients access that funding. Now, clients must demonstrate that they're economically impacted by COVID. Now, I can't think of a scenario in Australia for a business that would not have been economically impacted. So it doesn't need to be your business was shut down, so you're in Sydney or Melbourne, had long lockdowns. It can be that you weren't able to access the staff that you weren't, or you had a large exposure to international travellers who weren't arriving. that you weren't actually able to access supplies from overseas. So you weren't able to achieve the sales results that you're wanting, or the piece of equipment was delayed that allowed you to take on that project. So it's very broad, for us to understand what your economic impact may have been. So pretty powerful tool for us to assist businesses as they recover from COVID.
Thanks for that, Owen. One of the questions that came in, a late one this morning, was my business has been affected by floods. How can the banks help me? I already have loans. I think you probably answered that one really in that sort of thing, but I think the key answer is if they've got other loans, as long as you can see serviceability based on those criteria you've said, that's not going to be a barrier.
Yeah, and to expand on that, if it's not new funding that you're after, then the bank always has sort of hardship arrangements that we make if a business isn't necessarily impacted by flood, but they have another event that affects just them, that the bank was always open to deferring payments, providing short-term cash flow relief and whatnot. So my answer would be to speak to your bank, because there will, outside of the small loans and the COVID assistance loans and anything that the government announces to support banks supporting their customers around floods, is that there will be avenues for the bank to amend your current banking arrangements just as you recover from that specific event. And I think Advivo put out something yesterday about the government sort of direct solutions to helping businesses deal with the flood. So that's worthwhile exploring as well.
And this flows on from that as well, like not specifically just to COVID or flood assistance loans, but the age-old question. I'm thinking about applying for my business. How should we prepare? Forecast is one thing. There's a lot more to that.
Yeah, in terms of how you prepare, it's just being really clear about what is it that you're looking for. If it's just saying I want a loan for 500,000, it's what's it for and what are you trying to achieve? So it's really the story. Banking can be pretty dry. It's financials, it's loan amounts, it's really where we get into the most value that we can add for our customers is just really understanding the story. What are you trying to achieve? It's an age-old adage that someone goes to a barbecue and says, "I've got an overdraft. You should get an overdraft." And they come to the bank and say, "I need an overdraft, for 500,000," without any sort of clear indication why. It might be to buy a piece of equipment. It's the bank can go down the wrong path with you for a while without unless we sort of understand exactly what you're looking to achieve. So that's sort of clear and also working with your accountant and sort of saying, "Look, this is where my business is going. I need some additional funding." Your accountant can actually provide some guidance of saying, well, that's, you really need working capital, or you need to buy additional equipment, you need term debt, and that equipment's going to last for 3 years, 5 years, 10 years, and structuring a loan in your balance sheet of how to achieve that, and also who should be the borrowing entity. Should that be you personally? Should it be the company? Should it be the family trust? What's the most advantageous? Talking with the bank and getting that in place, getting all the documentation ready, and then oops, the Advivo crew pick it up and go, that's going to cause you all sorts of tax issues. So worthwhile engaging with your accountant as well. And really it's having up-to-date current financial information. If we think of where we're at the moment, February, March 2022, if you haven't done your FY21 financials, even in draft, then we'd be relying on your FY20 information. And that information is now, it started in 1st of July 2019. That data is sort of 2.5 years old at this point in time. So engaging with your accountant, having all your financials sort of up to date, so we can get a current sort of picture of where your business is at. And to Leon's point, forecasts. If you are seeking additional funding, then by its nature, something is changing in your business. So if it's as simple as you're renting a property and you're thinking about buying it, to operate your business out of, then a forecast may not be, as required. There's going to be a few changes. You're not going to be paying rent anymore, but you're going to be paying interest and loan repayments, and you're going to have to pay rates and land tax. So just having an idea of what that change would be. But if it's you're opening a new office or a new business in a new geography and taking on new customers and whatnot, it's kind of a fundamental change to your business. So having a forecast of saying, well, what's this money being used for, and what's it going to mean, to the business.
Thanks, Owen. And those forecasts we often promote, particularly when it's business related, i.e. growing business. If your business is growing, that usually means stock, debtors, all those things are going to grow. So just a profit and loss is not going to show those. You need to look at the balance sheet and cash flow, all three aspects of it. So you can see the cash impact, because cash is what repays the loans, not profit.
Yeah, so the net profit, and that's a really good point, the profit and loss just tells you, it's the scorecard, and it tells you how much you're going to pay ScoMo at the end of the year in tax. But the cash flow is really, it has all the underlying assumptions of how long it's going to take, customers to repay you, and what cash you're going to end up with at the end of the line. It really helps the bank sort of structuring a facility that's sort of right for you, and ensures you have enough cash at the end of the year to sort of meet all your obligations.
Thanks, Owen. I alluded to us catching up, and I'd hardly call it managing. We enjoy our relationship with you, but the question here is, how should I manage the relationship with our bank?
Banks sort of get bad press from time to time, and some of it's rightly so. But we're not the enemy, but in terms of managing the relationship, it just depends on how much of a stakeholder they are, in your business. So from my perspective, I have a salary job, I've got a home loan, I've got some bank accounts. I don't really need to hear from the bank, and I don't contact them very much. They're a sort of a byproduct. But for a trading business, they're going to be far more of a stakeholder in your business. And the things that I would keep in mind is, even if you don't need anything, is providing the financials regularly allows them to have most of the financial information. So when you do need something, and you do need something quickly, they've got up-to-date financials, and they can know where you're at. It also allows the bank to sort of suggest things regularly. If products have changed, they can see something in your business that they've seen in another business that's worked really well. They can pick up the phone and make a suggestion. So I don't think don't need to speak weekly, and some businesses are happy with an annual catch up with the bank, but we try to speak to most of our clients quarterly. In my segment, we have a portfolio of maybe 50 or 60 clients, so that's manageable to do that. But keeping the bank informed, if you've won a new client, if you've won an award, if you've had a great year, that's worthwhile sort of sharing that information, because at the end of the day, the bank may be able to look at it and say, look, from when we last assessed your loans, your risk grade has improved significantly. We could alter your pricing and save you money, by reducing your interest costs.
Thanks, Don. Actually, I'm going to lump two questions together which go to that, because the next one was, what are the ways of being on good terms with your bank when having a low credit score? So you might like to talk about credit scores. And the next one, which flows into that, was just what you're talking about, was why does the bank ask for financial information even if we don't need anything new, which I'm assuming is the annual reviews, etc. you're talking about. So you sort of covered both of those to a certain degree.
Yeah. So to the credit score, that again is just open communication. Really, what the bank needs to know is what caused it. Was it an oversight, administration? You moved address. Things that we can talk to our credit team about to say, look, this is something that's occurred but is non-continuing. That's the main issue. If it's something that you have resolved, then more than likely we can take a submission to our credit teams to say, look, this is a non-continuing event, and we don't need to worry about that going forward. If there's a reasonable explanation for what sort of occurred in the past. If it is something that has actually occurred and it has affected your rating in terms of a bankruptcy or whatnot, then talking to your bank again can put you on a pathway to say, well, these are the things, and this is the time frame that we would need to look at, to be able to then start supporting and providing funding for you going forward. So it really is about telling the story. We've had some very, very strong clients that have suddenly ended up with bad credit scores or defaults or judgments against them, and we've brought them to their attention. They've said, "Yep, we were never advised." I mean, it's not a perfect system, So bring it to their attention, having an explanation, getting to the bottom of it, and then we can move forward quite quickly.
And financials, when they're not asking for anything new?
Yeah, financials, that really comes down to dragging you into bank world. So we're governed by our banking license, is governed by ASIC and APRA, and our credit rating is also governed by the quality of the loans that we manage. So those organisations quite often or regularly or constantly are within our business reviewing files and saying, look, how did you come up with this decision, and how did you grade that loan to that level, and how have you monitored the performance of that loan over a period of time? So even if you're not applying for information, the banks do need to provide or review updated financial information to maintain and demonstrate the quality of our loan book. So that is really driven by the Australian sector, really governing it and being highly regulated, which has its pluses and minuses. But particularly through the GFC, all the banks and particularly the four pillars all remained solvent. We didn't have any banking collapses that we did see around the world. So it certainly gave those organisations the kudos to sort of maintain the current regulatory environment.
Thanks, Owen, and thanks, Ken, for one of those questions. We've got a few from Judy Collins. How do we get updates from our bank on loans and products available to businesses?
So in terms of that, I'm not sure if that's a question from your existing bank. If it is from existing bank, I would say just talking to your banker and sitting down and talking about your business. They will sort of prompt conversations and discussions around what they're seeing in the market, what they're helping their other customers with that might be relevant for your business. For finding out what else is happening in the market, two main avenues that I would suggest is the individual banks' websites. They all seem reasonably generic, but they will direct you through to business and their various products, and they will talk about what their criteria are and what those products can be used for. And then we'll have contact details, to be able to start those conversations. The others I would direct is to your accountant, your advisors, saying, they're looking at all sorts of businesses. They're seeing people's businesses deal with all sorts of banks, and that they may come up with suggestions saying, look, we've got another customer in a similar situation, and they've found a funding solution that might suit you. Hope that answers.
Thanks, Owen. And sort of following on from that, is there one website that compares all rates for all banks and does it update with market real time? So I think that's where do people go for an objective view on what the different banks are offering. And I know rates can be confusing because you've got all comparable rates and all sorts of different things like that for some people. What does all that mean?
Yeah, and I think being within the sector, seeing some of the advertising that goes around to say, where a certain online lender might be, 1% lower than the big banks, and I can understand how that can get confusing. Is that the headline rates that are advertised, particularly for home loans, are generic. They're the standard rate, but I would see that very few clients actually pay that standard rate. That they will, based on the loan amount that they take out, the LVR that they have. And when I say LVR, is the loan to value ratio against their home. That there's discounts for having lower loan to value ratios available. So very few customers would be paying, those headline rates. And to business rates, they're almost exclusively negotiated. Apart from very generic products like business credit cards, and the like, is based on the risk grade. So in terms of what the bank assesses as your ability to repay, and the quality of that, and also the security that you offer, there would be no two clients in my portfolio that would have the same pricing. It's all very much tailored to their individual needs. So it's very difficult to assess from a one website sort of position, or near impossible.
So from a business point of view, it comes back to get to know your bank manager and build a relationship and share information.
Yeah, and so we quite often had clients providing their financials, that have shown, and some of the results have taken us by surprise, saying, "Wow, your business is going fantastic." And then, we sort of flip over the other side and look at the rate they're paying, and proactively, say, look, there's probably we can do better. And thanks for sharing that information.
There's quite a few about what do I need to do for loans in terms of what information require. I think we've covered that, but one in particular says, why do banks need forecasts? They're only guesswork. Or what, and if so, what should be in forecasts?
To those, they can be to some degree, but what they give the bank is an insight to your thinking. They're a process. By putting together a forecast, you're going to come up with assumptions. And there's some base things that you actually know. That last year you paid your accounting bill and that was X. That's probably not going to change a great deal. You know what your rent is. You have a fair understanding of what your wages are. But if there's anything changing and that's happening, you're planning on growing your business, you're hiring new staff. Well, that's the key assumptions that you're going to put in, and that will drive those financial results, both on the profit and loss and your cash flow that Leon was speaking about. That say, well, this provides a clear need for additional funding for your business. But it's really a conversation so that we look at your historical results and look at your forecast and say, well, what's changed? And it's really have an informed conversation about what your plans are.
And this probably goes to that. One of our clients who's been many years with their bank, he said, I've been with my current bank for many years. They can see everything that goes through my account. Why do they need all this other information, forecasts, financials, etc.? Yep.
So with all due respect to Advivo, I think the guys would have a real problem just providing financial information just from reviewing a bank statement. It would be very difficult to pull that together just from looking at the transactions that go through an account. As an example, so banks have grappled with this over a number of years and sort of presented various loan scoring things based on the data that we have, and APRA have generally rejected most of those. Saying, look, they're not robust enough for us if you make an informed decision on that client's ability to repay a loan. So. And they can be misleading. If a customer has a non-continuing event, sells a piece of land, an unencumbered piece of land or an unencumbered asset, and all the cash goes into their bank account 2 years ago, if we were just looking at those bank statements, we would say, wow, your financial performance has really deteriorated because in the subsequent 2 years, you haven't had, it would look like your revenue has decreased materially. So just looking at those doesn't really necessarily tell the story. And a lot of clients will have savings accounts, that they use, put aside cash for tax, and that will be moving money in and out of the bank from the same account. So it would look like duplication of income, where rather it's just movement of money between accounts. So it doesn't provide like the full story that a set of financials and a forecast would otherwise do.
Thanks, Owen. And I suppose there's the flip side of that. What is a low doc loan?
A low doc loan is, and this would be my personal view, it's more of a retail product. So when I say retail, more of a home loan lending product. And to my knowledge, they've largely been grandfathered. What the low doc loan was designed to achieve was to say, look, for the banks to assess, and if you had a loan to value ratio on your house of 60% or less, the bank would assess that as low risk, particularly for self-employed people whose financials might not be all up to date, that they would say, look, we just need a declaration from the borrower to say, yes, I can afford that loan. And the bank would then say, we think we're at low risk because the property's worth far more than the loan amount, very conservatively geared, and we could provide that. Now, the Banking Royal Commission and the Code of Banking Practice, responsible lending guidelines set down by ASIC and many people, if they got sucked into the media cycle of that, would have seen the assessment of a very high income person, assessing whether or not they would give up their sirloin and Shiraz. Lifestyle is that we needed, the banks were mandated to really assess each person's independent income and expense situation before determining if a loan was appropriate for them to be able to repay that loan. So just looking at the value of the security was not suitable under responsible lending guidelines.
Very good.
Mm-hmm.
This is a little bit different, this one here for you, Owen. Do banks provide any free classes, resources or online resources for business development, marketing, social media, bookkeeping, team building, human resources or networking to help me grow my business?
Yeah, that's a great question. They do, and on the St. George Banking website under business loans, and I think if I remember, I can send this link through to the Advivo team after the event. There's it's under business guides, and it has a range of resources and articles about starting your business, growing your business, around sort of marketing, social media, and the like, and then it has links to other resources that state and federal governments, as Leon dies quietly, that various state and federal governments provide additional resources and training there. So I can send through that link after this event that provides some resourcing around that.
Thanks, Owen. My company operates through a company, which is what my good accountants told me to set up, for risk protection.
Mm-hmm.
But the bank still wants me to personally guarantee the loan. Why is this?
Yeah, great question. So in the industry that I work within, or sort of the segment that I work within, is all dealing with small to medium enterprises. So in the majority of those cases, those businesses really don't exist without the people behind them. So the basis of my training has always been is that you're lending to people. A company could be established and deregistered reasonably quickly, and without aligning the interests of the bank to the owners of that business and the managers of that and the directors in this case business, that would allow some people just to walk away from their debts. And I think that happens in other jurisdictions. In the US, they call it jingle mail, where even for home loans, owners were, if they worked out that their loan was worth more than what the house was worth, they just posted the keys back to the bank and walked away. And the bank was solely reliant on the value of that property. That's sort of indicates why that the US probably had more issues during the GFC, because that's how their banking system worked. But in Australia, we are generally mandated to lend to individuals. And if companies and trusts and unit trusts and whatever are set up, that's absolutely fine. We can accommodate that because that's good tax planning and succession planning structures. But we are really lending to the owners and operators of that business. So we want our interests aligned.
Thanks, Owen. I see there's some questions been coming in, so I'm assuming Kay's collating those, so we'll get to those shortly, so keep them coming, thank you. I've got a couple more, then I'll flick to James, got a couple as well. Why do banks keep moving bank managers around? I just get to know my bank manager and he probably just needs to get to know me and then he's gone. Yeah,
I haven't heard that Advivo have sort of been petitioning the bank to try and move me on yet. So I'm happy with
we're very happy to keep you, Owen.
Yeah. So and look, that would align with a lot of the surveys we do with our customers. That's one of their great bugbears: take away interest rates and fees, and changing managers having to explain the story of their business all over again. I can only really talk to my experience, and customers will come and say, look, I'm seeking another bank because I've changed managers 3 times. If I'm going to explain the story again, I may as well explain it to another bank and see if there's anything out there. I've been in the same role for around 19 years and had some customers that have been with me for that period of time, to their fortune or otherwise. And generally, in amongst our colleagues, so my boss who heads up St. George Business Banking in Queensland, he's been with the bank for 25 or 30 years. Some of my team have been in their roles for sort of 10 plus years. So we find that is the best way to retain our clients is keeping them in front of the same customers and building those relationships. Now, naturally, that's going to change over time. Over that time, we've had customers who have grown a business, sold the business, and now they don't really need a business banker, anymore. They've retired, the business debt is paid out. They're not sort of needing. So naturally, some clients will be resegmented to other areas, but I think the stability of the relationship, while it's continuing, is very important. But to that end, there's nothing stopping me getting hit by a bus. And so we offer a number of points of contact, and I think that's important, even from a client's point of view, is having a relationship with numerous people in the bank. That if someone does disappear, that other people know your business and can sort of take that up and educate the new person that comes on board.
Thanks, Owen. Over the years, it seems to have got harder and harder to deal with banks. Is this the banks or government as a result of money laundering legislation, banking inquiries, etc.? I think you alluded to some of that before.
Yeah, one of the most regulated sort of industries, in Australia. So there's lots of people that are in our business. ASIC, APRA. The federal government has an act which is really hearteningly called the Anti-Money Laundering and Counter-Terrorism Financing Act, which has really big teeth for customers and for bankers for doing the wrong thing, including jail time, and that's giving us lots of fun at the moment. But yeah, I would agree. It is getting getting harder and more complex. And I think in current times, if you were to go to the US or UK, opening a bank account is quite an onerous exercise. And really in Australia it was do a company search, provide a driver's license for the directors, and away we go, without really having gathering too much data on who the owners necessarily are. If that rolls up through another company and then goes offshore, that we really don't have that, never really recorded that visibility. So that's some of the challenges that we're dealing with at the moment, and our customers by proxy are sort of coming along with us on the journey for that. So that's certainly it. But yeah, Banking Royal Commission and the APRA's sort of mandate of keeping the banking sector strong, to give that confidence to the economy, which I don't necessarily disagree with at all. It does add a layer of complexity in terms of gathering financial information and making sure we sort of have up-to-date data.
Thanks, Owen. Last one from me from the pre-lodged questions, then I'll hand over to a couple of other people, which will probably rest my voice a little. But we've talked largely about lending today, just a little bit on transaction banking. So banks across Australia are closing branches. How are businesses supposed to do banking nowadays? What does the future of banking look like?
Yeah, I think that the last couple of years, particularly in the COVID situation, has shown that the usage of branches and the need for branches has really fallen away. I think my mother's business, she's 80, still works 6 days a week. I think she is solely responsible for keeping the check system alive in Australia. And for my sins, I have to do the bookwork every Tuesday night, and that it does my head in. But the need to go into a branch is diminishing with the amount of online available, and that's probably seeing the decrease in the number of branches around. There certainly there's some challenging industries which are pubs and clubs, which still have a high cash requirement, need sort of specialised solutions that normally they would walk down the corner to their local branch that perhaps doesn't exist anymore. But certainly the online transactions, and helping spending more time with staff that are having more value add interactions with our customers is probably the priority, rather than having people walking in just to do their banking over the counter. Now that's probably talking out of school, and the St George PR people would probably have a different view and take on that. But I think certainly we found a lot of our customers over the last 2 years have really thought and looked at how much they are paying their staff to collect cash, count the cash, walk up to a branch and bake it in, rather than because they've avoided paying merchant fees and said, no, we won't. You have to pay at least $10 before you can pay with your card, and then they've realised really what the cost of that within their business was costing them, and they won't go back to that way of dealing with their sales.
Thanks. Judy says she thought her mother was the only person still losing checks, and I can say my mother-in-law still is another one as well too. So, Jane, Tui looks after our marketing from Outsourced to Us. You've got a couple of questions you'd like to pose to Owen.
Well, I actually think my questions, you've asked my questions, but I did come up with a couple of others while you were talking. So what's the main difference between like, how do you decide whether you should go for an overdraft or a loan, or are they the same thing?
Yeah, no, great question. My partner is in healthcare, and as soon as I start talking the difference between loans, you can see her sort of grey out and try and back out of that conversation and back away from that question she asked, because it can drag you a little bit into bank world. But the different type of loan is really designed around the purpose. So an overdraft, and people around the world use different terminology, but an overdraft in Australia is really designed as a come and go facility. So it's really about managing your working capital. So if you sell something, you have to have bought it first from your supplier. So you need that cash to go and buy that first. Then you sell it. And you have to pay wages and rent all the way through, and then your customer might not pay you for another 30 days. So that overdraft is really meant to cover that working capital cycle of when you first paid money out, and then you paid out money all along the way until you receive that money. So ideally, that overdraft should come back into credit, at least annually. So if you have a real annual cycle to your business, if you think about a farmer, that might pay everything out all over a year and then finally sell their crop, then they'll come back into credit once. If you sell things on a monthly cycle, so every month, by the time you bought something, it only takes you a month to actually realise that cash back in your bank account. And that should really be coming back into credit, every month. If there becomes a hardcore, we call a hardcore debt component within that overdraft, then that really means there's an underlying investment that you've put into your business that really should be taken out and put into term debt. And it's not really being cleared by your working capital cycle. So that can be pulled out and put separately as a term loan. Now, typically term loans are 1% to 2% cheaper, than an overdraft. The bank has to put aside, 100% of the capital, for overdraft. So even if you're not using it, the bank has to put aside capital, which costs money. So they pass that cost on. So pulling that core debt component out into a term loan and then paying that off over a 10-year term and whatnot, so that you're actually building equity into the business is what we call a term loan. Now, similarly, when I talk about fit for purpose, if you're going to buy a building, now that you're not going to, unless you're in the business of buying and selling buildings every month, then really an acquisition like that or a large piece of equipment should be funded by a term loan. So you're actually structuring the debt over the effective life of that asset, which might be 25 years for a building, might be 5 years for a Toyota Hilux. So you're actually structuring the loan in line with how you're going to use the piece of equipment that you've invested in.
Jane, I did have one other question for you, which is what is the most common reason banks decline finance?
Yeah, and I did have that question about declining finance, but also I have something else as well, which might work into it. In terms of, it seems to me like the bank doesn't seem to value savings. I mean, because interest rates are so low, there's nothing that the bank really incentivizes you to save with them. And as a business, if you've managed to save some money in your business, How would you recommend that you manage that with the bank so that you get some benefit out of building up savings?
Yeah, no, great question. Like the interest rates at the moment, I can recall giving quotes for deposits and having someone lock in a term deposit for 8% for 5 years. Now that's just people don't have business loans at that level. So yeah, there is very limited incentive really for businesses to use to have cash. As it seems to be lazy within their balance sheet to actually using that cash. So what a lot of our clients have been doing is that, and the bank will recognise this, is using that cash to pay down debts within the business, and talking to your bank about saying, well, can I have a loan product that has redraw available within it, or can I have a loan that has offset against it? So similar to what you might have for your own home, is actually having those funds in an account that gives you a savings on interest, and that flexibility that you actually pay off the loan faster. But if your working capital needs or opportunity comes up to grow your business or acquire a building or whatnot, you've got that flexibility to redraw those funds that you've saved over that period of time, to make that investment.
Yeah, that's a good way of doing it. And yeah, that was another question I had about what's the most common reason, you don't have to go into all the reasons, but what's the most common reason that people get turned down for business loans?
Sure. There's two aspects that the bank looks at. It is ability to repay debt, and if that ability to repay debt stops, what is our second way out of recovering? So there's really only, if we want to simplify it down, is how are we going to get repaid from cash flow? So what's going to pay our loan over a period of time? And if that doesn't occur, what's the bank's second way out? So our security. So what's the value of the house, the building, whatever it is that we've taken as security for those loans. So it'll be either of those two elements. The bank doesn't have confidence that historical earnings will continue, or that a turnaround in that business will continue. It will be realistic, or it's a question around the value of security isn't sufficient to support the level of borrowings that are sought.
Kay, you've been fielding the questions that have been coming in as we go there, and I know you had one already from Andrew Farnham as well too. So can I flick over to you?
Yep. So the one from Andrew, he is interested to see what other banks can offer and how difficult moving between banks can be.
Yep, great question. Thank you, Kay. Thank you, Andrew. My answer to the question is no one is going to take changing banks as a hobby. It is not. It's not a side sport. It's nothing you would take on. But so changing banks, you really need to be very clear on what you're looking to achieve. From changing bank, is it just a low interest rate? In which case, I would always recommend talking to your current bank at the outset to say, here, look, here's my current position. I think I can do better, or the bank can do better. What's the best you can offer me to, before you start, looking around. If you're not satisfied with that, or you want, there's something else that you're seeking, it's just being really clear on what you're trying to achieve. When clients come to us, we'll always recommend that they keep their current transactional banking, live for a period of anywhere between 3 months and a year, so that you're not. Your business isn't being disrupted by just turning everything off and moving to a new bank until you've tested everything, until you've processed your first payroll, until your clients are all ready to keep paying you. If you've got clients that only pay you once a year, perhaps you only pay your accounting bill, once a year. You may not know that your accountant has changed his bank as to where you're paying, and those funds could go missing. Generally, they could always be tracked down, but no one's got the time to invest in that. So keeping your other accounts open for a period of time until you know that everything's working on the new platform, and also all your customers know of your new banking details. We had a auto dealer, so a car dealer, and he had bank accounts from 3 banks ago, because he said some people, and fleet buyers that still bought a car from him would still pay whatever was in their internet banking to this old bank account. I mean, I don't understand who pays for a $50,000 car without checking the bank account details first, but they just kept them open because it was too hard to go and try and track down that $50,000 payment. So George's experience, we have transaction banking managers. So they're people who they've never lent a dollar in their life. All they deal with is money in, money out. And they help our clients get on board. And they walk away basically once the client has set themselves up all on internet banking, run their first payroll, and then they step out once the person is all up and running. So yeah, certainly something you wouldn't do for sport, but the banks are generally set up. I do apologise, that's not me coughing in the background, that's the dog. Set up to help ease the process as much as possible.
Well, to follow on from that, Judy is wondering if banks can match other bank rates if the other banks are better.
Yeah, so absolutely. So banks are like any other business. That if again, if you keep us up to date with your financial information, that we can match or do better without you having to go out to a competitor to see what other deals are out there. But it really is a conversation, saying, look, another bank has offered me this. I'm prepared to stay as long as you can match it or get close to it or beat it or whatever your circumstances are. They absolutely can. There'll be some products that are designed to be fixed. So, even being a staff member for 20 years, my credit card rate is exactly the same as everybody else's. They're designed to be generic. But then they're generally not going to be the big ticket items that you're sort of looking at in terms of what the interest rate is on your credit card. But certainly everything from home loans, business loans are all up for negotiation.
All right, and what kinds of turnaround times are you seeing at the moment for business loans from the first approach to settled, assuming that the client has all the financial information needed readily available?
Yep, very good question. So, but it is how long is a piece of string. So, in terms of how complex the arrangements are. In terms of having all the financial information, the last one that we did earlier last month, we probably had the last piece of financial information. It took us probably 3 days to get the approval into or the application into credit and approved within 36 hours. So, really the turnaround times are good, and it really comes down to the quality of financial information that's provided. We've had other deals, in years gone by that have had birthdays just because the financial information took time. Getting financial information out of the vendors if they were buying a business, doing due diligence, whatever it might have taken, it's sort of gone around the calendar and come back again before actually settlement achieved. But that just comes down to the circumstances of the transaction. But yeah, the most recent one, very good quality of information, very responsive, and we're able to get it approved, inside a week.
The previous one you talked about, Owen, obviously wasn't an Advivo client.
The one that went around the calendar. Look, sometimes the quality of financial information can be great. It's just the due diligence on the deal. Like, whoever you're dealing with, the counterparty, the business you're buying, it just might have dynamics that are changing. If you were looking to buy a business, in hospitality in the last couple of years, and suddenly a lockdown occurred, then you might have a force majeure, element in the contract that says, hang on, we'll just wait until we know how the lay of the land, in terms of when pubs are able to open again. So certainly we've come across circumstances like that. So it's not, things can just happen. It's not usual, but things can happen. That's outside everyone's control.
Thanks.
I have a couple more. So Naomi wants to know what are some tips she can use to manage their credit score.
Absolutely. It's some sort of admin hygiene. It's really keeping your contact details up to date, just so that you don't miss a payment, you don't miss correspondence that perhaps your payment date has changed. Signing up to direct debits wherever you can, just to make sure you don't ever miss a payment. That's the ones we generally see are Telstra, Optus, Origin, things that, you've moved house, you haven't let them know. I mean, moving house is sort of like changing banks. You wouldn't do it if you had a gun to your head. You just for that general admin of things you missed. That's where we sort of see, and keeping all your payments up to date. So there is, again, St George PR will kill me. There is an act that came through in the last, I'm going to say 2 years, where it was a mandatory credit reporting act, and it mainly focused on retail, but I think it also fed across to small business, is that if someone misses a payment on a home loan, credit card, we had a mandatory positive obligation. We had no discretion that we had to send it out to a centralized credit scoring area, even if the bank had no concerns. If they said, oh, look, we know that person is away on holidays, they haven't got the email, they haven't set up, their online banking, they haven't been able to pay that thing. It was a mandatory reporting, that account's overdrawn, and that would affect their credit rating. So keeping that up to date, and if you do see a problem arising in terms of a short-term cash flow issue, it's just talking to the bank and saying, look, can we get a short-term increase just to manage this short period of time, just so that all your repayments continue to keep up to date.
All right, last one. Sophie is wondering, why does the exchange rate differ from bank to bank, even though they are the same exchange rate?
Sure. Outside my skill set a little bit in terms of financial markets, so we're very much into the general advice realm. It really comes down to supply and demand. It's really how the banks are set up, and the exchange rate does change throughout the day. So it will come down to the service they're offering. Some, one provider might be a solely online provider, and some banks will have an in-person, on the ground, in the branch service that, that's assisting you with this. But that's going to affect the exchange rate in terms of the amount of investment that they've had to put into that service offering. So it really is, what are you getting at the end of the day? But it is a very dynamic environment. So it is very easy for customers to then shop around and get the best deal that they can.
Was that another one just came in then about cryptocurrencies, Kay?
Yes. So Nelsie is wondering, we went from gold, paper, currency. Now many people are doing cryptocurrencies. Will the cryptocurrencies soon be the most used payment method?
If we look back, 10, 12 years, we didn't have smartphones. The most technologically advanced thing we had was a BlackBerry, and people were just amazed. I can get my emails. So very hard to predict the future. Some bankers and futurists have sort of been saying, look, we'll be cashless, within 10 years. Now they were starting that, sort of 20 years ago. And yes, the trend has certainly been towards, towards cashless, but looking towards the future. I'll say I'm pretty old school, and people have sat me down and explained cryptocurrency to me, and I've said, yep, I get it. And then I go home, I go, no, I don't get it. So I think that there will naturally be an evolution, towards other investments and other payment platforms. Just the rate of change that we're seeing in terms of the online space, and banks' investments. I mean, you've got banks investing in Afterpay, you've got banks investing in their own platforms, in terms of doing things, in a different way. So I think that will be an emergence, and it will become more part of our lives. I think there's still a fair bit of risk that you're going to see some players come in and blow up, and it will take some time to get some confidence in that sector. But I think, it certainly will be, in my personal view, it will be something that it certainly becomes part of all our lives, and someone's going to have to sit me down again and explain it all again to me and get me comfortable with it.
Done pretty well. It's 1:28. Any more questions there, Kay?
Just one more. Because direct banks operate online, would you complain when the bank decides to shut down their servers, when they hold your money without any option for you to get the money back, especially if the bank is hosted in another company?
Can you just go through that one again? Or was that in the chat? I might have a
That is in the chat.
Direct banks operate online. Doris, is it possible to get a little bit more sort of explanation on that query? Is it like when internet banking sort of goes down, and I'll never sort of sneer at another bank, if it hits the media that their online banking crashed for an afternoon or whatnot, because it can very easily happen to everyone else, and it's a very bad day for everybody. So I'm never pleased to see another player have sort of an issue for a day or it's a very bad day there. I'm not sure if that's the question, but if it's hosted in another in a kind of, I'm just not sure on the so when PayPal closed their service, who would we complain to? Unfortunately, I think that's probably outside my skill set or expertise. If the issue is with PayPal, it's hard for a bank to comment on there. I think it would be a complaint through to PayPal, and making a dispute directly with them. Most organisations will have a complaints area that they, particularly in the financial services sector, their ability to trade is sort of governed by ASIC or similar regulatory body, where they have to deal with complaints in an appropriate manner, appropriate time frame. But without knowing any more details about that, I probably couldn't comment on PayPal.
Thanks for that, Owen. I think we give a commitment to try and stick to time as best we can. So look, if people do have any further questions, forward them on to myself or Kay. We'll forward it on to Owen and get back to you. Thank you everyone for attending. Owen, thank you very much for your time and input into this and the effort you put in there. One thing we did say that there would be a prize for the best question. And I think given the floods and the conversation went around the topic of government assistance, Jane Toohey gets that one. Thank you, Jane. There's a gift voucher on its way to you. So, and if you want more about that, there was a post on that. As Owen said, it's still unfolding a little bit, but thank you very much for that. Thank you everyone for attending. Great job, Owen. Thank you for all your help, Kay. And we wish everyone they still continue to keep safe and healthy. And we'll talk to you soon. The next event coming up is when and what, please, Kay?
Thanks, Leon. Thanks.
So it's on the 28th of April. It's coming up, and it's on mergers and acquisitions.
Thanks very much. Thank you all. Thanks, Owen.
Thanks, Vivo. Thanks all. Bye.
Bye.